Picture waking up every morning without the nagging alarm clock, feeling a warm embrace of financial freedom. Now, financial freedom is a dream that many of us have, but only a select few manage to turn it into a reality, especially at an earlier age. However, as some of us know, there's a proven strategy that has helped numerous individuals achieve this goal of living off dividend-paying ETFs. Now, the concept of living off of dividends is simple yet powerful. Instead of relying solely on traditional retirement savings or volatile market returns, you can create a reliable income stream through dividend-paying ETFs. By investing into these ETFs that consistently distribute a portion of their profits to shareholders like you, investors tap into a wellspring of passive income that can sustain the rest of our lives. Now, in this video, we're going to go through what I personally think are the 3 best dividend-paying ETFs that a young investor with a long-term time frame can invest into. Now, make sure to stick around until the end of the video because you are not going to want to miss a thing. Now, the first high-quality dividend-paying ETF that I think every young investor that wants to retire early off of dividends should be buying like crazy is the SCHD, the Schwab US Dividend Equity ETF. Now, SCHD invests in public equity markets in the United States. It invests in stocks of companies operating across energy, materials, industrials, consumer discretionary, consumer staples, healthcare, financials. The fund is very, very well diversified. Now, this fund invests in growth and value stocks of companies across diversified sectors and market capitalizations. What's great about SCHD is that even though it does pay a substantial dividend, which we are going to go through here in a second, the ETF also has some massive capital appreciation, which means that in theory, whatever you buy SCHD today, it's going to be worth much, much more down the road. At least it has done that, historically speaking. And SCHD on the max time frame is up 181.97% on the chart. And what's great is that SCHD is still pretty much in the middle of the range of the 52-week range, 65.96 being the low and 79.49 being the high. So SCHD might possibly be a good buying opportunity as of right now. Now, this ETF also has a very cheap expense ratio, which means that investors are not going to have to pay all that much for holding on to a high quality ETF like this. The expense ratio is just 0.06%. This ETF pays the dividend every single quarter and has paid around $2.64 over the last trailing 12 months. The Schwab US Dividend Equity ETF's assets under management, how much money is in the fund, is $48.29 billion. So this ETF is very large, one of the largest across the entire market. Now, another thing I love about this ETF is the fact that it's heavily diversified. I'm a little bit more of a scared, more conservative investor personally, so I like to have my portfolio, I would say, even over-diversified because it just helps me sleep better at night. But SCHD's holdings are industrials at 17.56%, healthcare at 15.52%, financials at 14.30%, consumer defensive at 13.32%, consumer cyclical at 9.68%, energy at 8.82%, communication at 4.66%, basic material 1.94%, and utilities at 0.28%. Also, the top 10 holdings for this ETF are very recognizable and have a history, a long-term history, of not only paying dividends but also raising dividends over the long term, which gives this ETF a very fast dividend growth rate. The top 10 holdings are companies like Broadcom, Pepsi, Cisco, the Home Depot, Coca-Cola, Texas, Merck, Pfizer, UPS, and Chevron. And overall, SCHD has around 100 different companies that do change out from time to time, but as of right now, the top 10 are very, very solid. Now, getting into the Schwab US Dividend Equity ETF's dividend yield. The current trailing 12-month dividend yield is around 3.6%, which offers a very decent starting dividend yield for investors that would buy some shares of this ETF right now. The annual payout is around $264, and the 5-year dividend growth rate is over 15%. Now, looking at this ETF's quarterly payouts as far as dividends go over the last 10-12 years or so, it's obvious to see that the dividends that have been paid are continuously getting bigger and bigger and bigger, which means investors that get into this fund early will likely see some massive dividend growth in the future, and also will be able to have their investment money stretch a lot further and earn them much more money in the form of dividend payments that can definitely help investors retire early. The next dividend ETF for young investors to buy into early, to hopefully retire early also, in my opinion, would be VYM. Now, VYM is the Vanguard High Dividend Yield ETF, and it's an ETF that was launched by Vanguard a while back. And this fund invests in stocks of companies operating across diversified sectors and also invests in dividend-paying companies. Now, VYM was started well over 10 years ago, offers the same expense ratio as SCHD at 0.06%, has a quarterly dividend frequency, and has paid around $3.31 in dividends over the last 12 months. Now, VYM is also heavily diversified, which is why I like this ETF so much. It is 19.26% of the fund in financials, 14.85% in consumer defensive, healthcare being 14.03%, industrials 11.67%, energy 10.36%, technology 9.56%, utilities being 7.42%, consumer cyclical at 6.87%, communication at 3.72%, basic material at 2.24%, and real estate at 0.01%. Now, VYM's top 10 holdings are companies like ExxonMobil, Johnson & Johnson, JP Morgan, Procter & Gamble, Broadcom, Chevron, The Home Depot, Merck, Pepsi, and AbbVie. All in all, maybe some of these companies are a little bit boring, but they all do have a few things in common. They have a long-term history of paying dividends and raising them, and also have a long historical track record of positive financial performance. Now, VYM's dividend yield is a little bit lower than SCHD's, with the trailing 12-month dividend yield of 3.09% still being not all that bad at all. And also, like the last ETF we went over, VYM offers some very decent dividend growth. For example, a few of the last quarterly payouts were around 90 or even 80 cents per share, where just around 5, 6, 7 years ago, the same share was only paying around 45 to 55 cents per share. So with an ETF like VYM with high quality holdings, a track record of capital appreciation, and also dividend growth, an ETF like this would be a great ETF to look into for younger investors that want to retire early. The last high quality dividend ETF that I think all younger investors that want to retire early should definitely look into is the Vanguard S&P 500 ETF. Now, the Vanguard S&P 500 ETF is an ETF managed by Vanguard, and the fund seeks to track the performance of the S&P 500. This fund offers some massive capital appreciation, which means you might not get paid as much as far as dividends necessarily long term, but you are going to see some massive capital appreciation, which could definitely allow investors financial freedom at a very young age. After all, VU is up 292% plus as far as ETF price. And since VU tracks the S&P 500, it's no doubt that the holdings are obviously going to be very high quality, meaning that technology makes up the majority of the ETF, which is why it has so much growth potential. Healthcare next, financials, consumer cyclicals next, communications, industrials, consumer defensive, energy, utilities, real estate, and basic material. Now, the top 10 holdings for VU is Apple, Microsoft, Amazon, Nvidia, Alphabet, Meta, Berkshire Hathaway, Tesla, and United Health Group. And once again, because this fund tracks the S&P 500, investors are definitely buying into a piece of some of the best companies in the entire world. Now, VU's dividend yield is definitely the lowest by far out of all three of these different ETFs, with only 1.5% being the trailing 12-month dividend yield. And as you see right here, VU does also offer a quarterly paid dividend that has been growing consistently over time. But once again, it's pretty obvious that investors buying into VU are definitely not just buying into this ETF because of the dividend. They want to see some massive capital appreciation on top of that. So those are, in my opinion, the three best dividend-paying ETFs that also all offer some massive dividend growth and also some massive capital appreciation on top of that. Now, none of these ETFs are necessarily all that groundbreaking or special in any unique way, but they do all have a track record of paying dividends, growing dividends, and all offer capital appreciation with a basket of holdings that should allow most all investors to sleep well at night. But I want to hear what you guys think down below. Out of these last three ETFs, if you were to only be able to pick one, which is your favorite and why? If you enjoyed this video, make sure to please drop a like in this video and subscribe for more content like this in the future. Thanks for stopping by, guys, and I'll see you in the next one.